In case you didn't see already, yesterday was the first day of fall. And when it's fall, you know what that means. It's football season again. And yes, that is why I'm wearing my ECU jersey. They do have their first football game of the season coming up this Saturday. But you know what really ties football and fall together? Beer. Be remiss if I didn't have a cold one here with me. So today, let's go ahead and talk about Molson Coors. Hey everyone, thanks for joining me today. My name is Matt, and before we get started here, I just want to say this is actually just a seltzer water thing. It's not actually beer. It's like 8 o'clock in the morning, so a little too early for that, but just kind of wanted that there for the aesthetics. So odds are, again, if you live in the United States or Canada, you've probably heard of Molson Coors before because they have some very recognizable brand names. To name a few, they own Blue Moon, Coors, Keystone, Miller, Vizzy, and Terrapin. They actually have about 108 brands from what I saw on their website, but what they do is they separate or treat, Coors and Coors Light as two separate brands. So a lot of different categories or different beers that they make, again, give or take about 108, including their kombuchas and seltzer waters. So surprisingly, or maybe not surprisingly, Molson Coors actually has some of the deepest roots that I have seen from a company from doing these Watchlist Wednesdays. Now, it should be said, I should mention that there's 3 people that each started their own brewery. Obviously, down the line, they all just merged together, creating Molson Coors. But just to give some backgrounds about those 3 individuals. John Molson was an English immigrant and opened up his first brewery in Canada. His brewery opened up in 1786 and now makes one of Canada's most recognizable beers, Molson. Adolf Coors came from Germany and opened up his first brewery in one of my favorite places to go to, Golden, Colorado. His brewery opened up in 1873, but what I found kind of funny or interesting is that Coors Light did not actually come around until 100 years later in 1978. And lastly, we have Frederick Miller, or as I like to call him, Freddie Miller. Now, Freddie Miller also came from Germany, and he came from Germany after leaving his apprenticeship as a brewmaster. He landed in Milwaukee, and one of the things that made his beers notable or got publicity is that he actually brought yeast with him from Germany that he had from his apprenticeship, and it's said that Miller actually still uses that same yeast today. Now, if you don't know, yeast kind of just grows on and on. That's how you can have like 150-year-old sourdough starters or scobies from kombucha. So if you're wondering how they're still using that same yeast after all of those years, that's why. Now, given all of these companies were started before the 1900s, there's so much history that we could really talk about. And just for sake of kind of sticking to the finance stuff here, I'm going to skip all of that. But it is just worth noting, or something I also found interesting, is that Coors and Miller during Prohibition actually were able to survive that era by brewing their own sodas and malt syrups. So I'll start off today by talking about their earnings call. And really, this will also be just a quick section because it was not the best earnings call I've heard, but just a few key points that I heard during this call. Probably the biggest one is that their net revenue was down by about 15% during this quarter. Now, what that has to do, or why that happened, is because since a lot of restaurants were closed, their demand for kegs dramatically decreased. But at the same time, they reached record new highs of cans, or people demand for canned beer. And so they obviously did the best they could to be able to meet those demands, but with it being record highs, ultimately they ran out of resources, and not only just them, but also the canning supplier. I could be wrong here, but they mentioned Ball, which is funny enough, another company I actually wanted to do Watchlist Wednesday for, so look into that if you'd like. But they mentioned that Ball was opening up new plants to be able to meet that new high demand for cans. So if you don't know Ball, the mason jar company, they make cans. They actually make cans for a lot of beer companies. And when they run short on their supply, it has kind of a trickle-down effect for the businesses that depend on Ball's canning supplies. So that was part of the reason why it hurt the revenue, because again, demand for kegs was down and they weren't able to fully meet the demand for cans, which is ultimately going to hurt their bottom line. That is something, though, I do see as more of a temporary problem, because once restaurants open back up again, I'm sure that'll start to balance itself out again with having, kegs come back up in demand and maybe a decrease in cans. But, definitely I'm hoping that kegs will see a higher demand in the future. An area of opportunity that I saw for them, or something that got me excited to hear about though, is that they are now the official sponsor of the Las Vegas Rams football team. I apologize. I realized as I was going through my editing there that I did say the Las Vegas Rams. I did mean the Raiders. It is the Las Vegas Raiders. I don't know how I made that little slip up there, but just wanted to be clear. I'm aware it is the Raiders, not the Rams. So back to the tape. So that helps because they'll be able to sell their beers against once people go back into stadiums, directly at those stadiums. They also have a partnership with 50% of the MLB teams. They said right now this has hurt them a little bit in the short term, but they really think that this is going to be a long-term fix for them and something that could be very profitable down the road. Again, once people start going back into baseball stadiums and watching the games so that people can keep buying beer from them. And last cool thing I heard from the earnings call is that Coors is also coming out with another seltzer because that's exactly what the beer market needs. All right, and so let's go ahead and take a look here at the numbers. Now, this week I am going to be comparing the numbers for Molson Coors to two other beer brands, Constellation brands, as well as Sam Adams, or Boston Brewing Company. And as we could tell here, just from a market cap perspective, and this is actually something that was surprising to me, Molson Coors is the smallest. I guess when I was doing this research, and I should say, I was actually going to do Sam Adams. I really like the founder of Sam Adams. I think he has a great backstory. I like, their beer, honestly, a little bit more than I like Coors and Miller Lite. But we'll get more into why I decided to stick with Coors a little bit later. But I did think it was just a little strange there to see that Molson Coors is smaller from a market cap perspective than Sam Adams is, or Boston Brewing Company. And if you're not familiar too, I should say just really quickly here with Constellation brands, they have brands that are more like Mexican style beers, so like a Corona, Modelo, some other beers along those lines, but they also have a heavy focus in the cannabis industry. For the PE ratio, this is one of the reasons why I decided to stick with Molson Coors. And as we could see, so I just wanted to point out here, we're going to start with the forward PE ratio. We could see here that Molson Coors Tap has the 9.33 PE ratio, which to me definitely looks like an undervalued company. We could see Steez is around 21 point, I'm sorry, I keep calling it Steez, it's Constellation Brands, is around 21.05. And Boston Beer Company, 71.83. That was also one of the reasons why I stayed away from Boston Brewing this time. But if we look at the, if you go into Yahoo Finance and look at their PE ratios, you typically probably see a different number than what I present because I usually like the forward PE ratio more than the 12 trailing months. But I just wanted to point this out here as well, that we could see that Molson Coors actually does not have a PE ratio for the past 12 months, but that's because they didn't have positive earnings. And that is actually where I see the opportunity here. So not all the time do I see a negative number and think it's bad, because that could just be maybe missed expectations or one-off situations like a global pandemic that can hurt that bottom line. So that's why they don't have a TTM PE ratio. But as we can see for Constellation Brands, 651. I think with the exception of Tesla, when it broke like the 1,000 PE ratio, that is the highest PE ratio I have seen. So that's crazy. And Boston Brewing, still around 82.67. So theirs really seems to be consistently at a premium. As we can see for the 3-year revenue growth, 4.2 for Molson Coors, Constellation Brands is at 3.58%. And again, Sam Adams at 18.34%. That is a really good number to see, especially when it comes to something like revenue growth over the past 3 years. Personally, I do believe that might have something to do with the fact that Sam Adams and Boston Brewing Company, whatever you want to call them, has a little bit more heavy of a focus into like the craft beer industry, where, Coors is just Coors. It's like, alcohol with water. And so Sam Adams is a little bit more niche in that area. And I think with the way that craft breweries have been growing to a large scale, Sam Adams is generally going to be a good bet to see this kind of growth, in my opinion. Beta, the thing with beer companies is that they are one of those like consumer staple items. So usually you expect these to be a little less volatile than other companies out there, or comparing them to a tech company specifically. But as we could see, 0.88 for Molson, Constellation Brands 0.97, and Sam Adams with a perfect 1. So they all really perform fairly relative to the market. obviously with Molson Coors being the least volatile. Earnings per share. I think this is the first time I've looked at a company with a negative earnings per share. And I'll admit, it's not really that settling going into it, but, negative 0.075 for Molson Coors, Constellation Brands coming in at 0.29, and Sam Adams at 11.15. Part of the reason why I decided to go with Coors over these other two brands, for Constellation Brands, they have a huge investment now in the cannabis industry, and there's really nothing wrong with that. But for me personally, I just don't think I'm ready to have a large investment in the cannabis industry. I know Canada's a lot further along with it than the United States is, but there's just so many uncertainties with that it's hard for me to really predict what the future looks like. And I think with, constantly changing laws and regulations and what you can and can't do, and every state in the US having different ways that they approach it, it's just something that makes it a little difficult as an investment. And since Constellation has such a high exposure to it, it's not really something that I would be interested in for the time being. And for Sam Adams, I really just do feel that this company is very overvalued right now. I mean, it's not overvalued by much. I think with their discounted cash flow, it was overvalued by about 20% maybe. Which is a lot, though. As I said, that is a lot to see for a company like that. And, they're trading at almost $1,000 a share. So they're up there with companies like, Chipotle. And I just don't see Chipotle, the share price, if you try to compare it, I don't know. For me, Sam Adams was just too overvalued. And that's ultimately why I had to do a last minute pivot and stuck with Molson Coors. Now, I could do Anheuser-Busch, but they're not technically an American-traded company. They do have ADRs. I know all of that, but I just kind of wanted to stick with companies that are actually American companies. And lastly, the reason why I chose Molson Coors is using Simply Wall Street's discounted cash flow analysis to kind of figure out an intrinsic value for the company. They're indicating that this is 58.3% undervalued. So as you see there, current share price of this is showing at that time was $33.73, and they gave them a fair value of $80.98. Now, this is a company that has been $100 a share in the past, and it has been dropping recently. But I think that this is just a company with such a recognition that it's not going anywhere anytime soon. And I really only see upside potential for Molson Coors. I don't see this going down to being a penny stock. It's not Kodak. So I think that as long as they continue to invest in the right areas and keep up with the trends, by investing in seltzer companies or whatever the next trend will be, maybe if it's, back to shandies or twisted teas or anything along those lines. I think that as long as they keep that kind of focus in what the consumer is asking for, they will be back up there, around $80 a share. I don't know. Even if they get to 50 though, and if we bought it at 30, I will still be happy owning this as a company. So, and also again, it's football season. So I do expect that their sales numbers will increase for this next earnings report. Maybe for the next 2 or 3, we should actually see an increase in their sales and revenue, given that it's football season again. So just for that reason alone, I think that this is actually a very timely investment right now, and something that, again, I just have a large amount of optimism for. So with all of that said, I'm going to add it to the portfolio here, and I think I'm actually going to get a pretty large position of this one. So bear with me for one moment. I'll be right back once it's in the portfolio. All right, so I went ahead and added this to the portfolio, and I did get a large portion of it. So most shares I've ever bought in Unwatch this Wednesday, I went ahead and bought 125 shares of this company. Now, right now, it's looking like it's down. I always try to take a screenshot of that, and then the price changes and everything, so you usually don't see the real price. So we bought 125 shares at $33.86. Of course, right now it's trading at $33.51. Now it dropped like 40 cents in a few seconds, but that's okay. Again, I think that this one has a lot of upside potential, and one that I'm not really going to be concerned. Even if it goes down to like $28, sure, I missed a good opportunity to buy at 28 instead of 33, but with us thinking of maybe more of an upside potential of upwards of $50, which is going to be my personal price target, then I am a-okay with it just taking a little bit of a dip right now. And again, this could be a very promising investment for us. Actually, at this point too, I can't fit all the Watchlist Wednesday positions that we have on the screen at once, which I guess is a good problem to have. So just kind of a quick overview here, and I'm sorry, I'm not going to pop it up on the screen just because it's too hard to filter through it, and I don't want the font to be so small you can't see it anyway. So we're up right now $13,382, and that includes the cash paid out through dividends. Our biggest gainer, still Peloton. That one's now actually up over $4,000, up around $4,300. Biggest loser is Monster. I can't say I'm thrilled about that, but I can't say that catches me by surprise either, because, I mean, Monster's just not that well known of an investment, so it's one of those more slowly moving companies, and again, I don't regret that decision at all. Definitely the other ones that we have outweigh the loss that one has, so it's not a big deal, but just is kind of interesting to me that one is our biggest loser. But with that being said, it's still only down $292, where, you know, the gains we have on Peloton wipes that out tenfold. So nothing that I'm too concerned about. And yeah, I mean, the market's been volatile, so I expect this account to go down. I know the week that I hyped it up saying, oh, we're almost at $20,000 in gains, of course the next week said it would be down, but we're still headed in the right direction, and I think during crazy times like this, it's just good to still see some green on the page. Now we have a beer company in the portfolio, so I hope that you enjoyed this video today. Please leave a comment down below if you have any other questions for me about this company, or if you have a company that you'd like for me to add to the portfolio, or just do another analysis of, kind of like I did with Slack yesterday, which is not on the watch list Wednesday, but I'm still happy to talk about companies that you might want me to take a look at. If you like this video, I hope that you give it a thumbs up, and if you haven't subscribed already, again, it's free. So I just ask that you consider hitting the subscribe button. Doesn't take anything but just a few seconds of your time to click that button, so take it into consideration. Thank you so much though for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, and I really appreciate that. But I will let you go ahead, enjoy the rest of your day, and I will see you next time.